A very warm welcome to you as you join us on today's episode of Tax Matters. My name is Olumuyiwa Matuluko. Last episode, we brought you an interview with Mr. Francis Obri, the Regional Coordinator, Southeast Region of the Federal Inland Revenue Service. Because of time constraints, we couldn't conclude the interview, and we did promise that we'll continue today. Here we are. Once again, welcome to Tax Matters. Let's come back home to your region, the Southeast region. How many offices do you have in Enugu?
Enugu, we have only one office. That within my jurisdiction, MSTU. Okay. But for others, we have the medium tax office, and we also have the government business tax. But directly within my jurisdiction, it's just one.
In recent time, the FRS has come up with different initiatives. For example, the Taxpayer Identification Number Scheme, which is a joint tax board project, e-filing, e-payment, self-assessment, all kinds of laudable initiatives. The Integrated Tax Administration System, ITAS, and all that. How are your taxpayers, these micro and small taxpayers, how are they taking advantage of those initiatives? Can you see any impact on their operations and their dealings with you?
Obviously, yes. Of course, some of them are very mandatory. They don't have a choice. They must key in, otherwise they are out of business. For instance, take self-assessment is mandatory. It's a position of the law that for some time now, all taxpayers have to comply with the self-assessment regulation. So it's not optional. D2 for the issue of tax identification number. Of course, if you don't cooperate in that regard, you'll be shut off, because you can't even transact. Most business is not even beyond the tax office, like opening bank account and the rest of them. So some of them is compulsory, but for the others that are optional, I think what the message is that it is clear that they stand to benefit substantially from the transformation projects, exercises that are going on in the service. And I see the readiness by most of them, keying in. The only challenge I see, which is very glaring, is the ICT capabilities of some of them, especially companies or the taxpayers within my bracket. Well, for the LTO and the MTO, yes, the ICT, capabilities, presumably, is high, and it should be high by reason of the size of their business. But for the smaller group of companies we are dealing with, even the cost of complying sometimes with some of the requirements, which were some of the transformation, like e-filing, like e-payment may be easier, but like e-filing and some of them may be burdensome, to some of them. But we hope as we get more and more into the ICT stage, it will become easier for them. But certainly, the transformation, exercises that are going on are beneficial to all of them.
Talking about capabilities, let's look at the average small business owner. The average, not all of them. Apart from the capabilities you spoke about, they also have problems with having the necessary expertise in-house. Most small business owners don't have their own accountants. If they have anything at all, maybe it's just an accounts clerk. The average Nigerian businessman does not have a lawyer on board, not necessarily even working on a day-to-day basis, but on retainership. You don't get a doctor until you get ill and all that. So, taking all that into consideration, the fact that, for all intents and purposes, the managing director, the business owner, is the all-in-all. What do you think that the average business owner can do to make you happy on your job, for you to now say, this man is this company is a good corporate citizen of this country?
Very, very simple. If we look at the requirement of the statutory requirements, or deviating a little bit even from Companies Income Tax Act, let's go to the fundamental legislation. which is the Companies and Allied Matters Act. What it specifies is that companies are expected to keep an average set of records. It didn't specify specifically the kind of records. So that opens a window for the business operators to keep record, at least in a form that will enable the tax official or the revenue offices to be able to have a clear understanding or a clear evaluation of the sizes or the operations of the business. So that leverage is there. And with that leverage, it is not mandatory for any company who so cannot afford it to insist on a chartered accountant. Nothing prepares from keeping the record in a very simple format. Even a small notebook could do all the recording that will enable the revenue to determine the income and the expenses at the end of the day, and to enable especially the taxpayer to be able to file his returns at the end of the day. So there is nothing imposed on the taxpayer by way of saying, no, you must do this, you must do this. The ICT capabilities we are talking about, it may even be a very small computer, that will enable the taxpayer to record some few transactions, make it easy for them to retrieve and the rest. It may not be a very extensive, ICT, requirement. No, that is not the intention. So the bottom line of it all is that a shrewd, intelligent taxpayer should be able to manage his affairs, arrange it in such a way that this burden, the management, the equipment, and the rest of them will not take a chunk of their profit out of them. They should be able to manage it.
When those records have been made, how do I go about filing my tax return? Do I just come and give you my recordings?
Obviously no. Obviously no, because the provisions of the company's income tax requires that the accounts have to be audited by qualified auditors. But then, what are the auditors going to use in the preparation of their returns? It is a set of those documents we are talking about, those small records. In the minimum, we are talking about the minimum now. Otherwise, there are standard books and records, that should be kept. But we are talking of the category of taxpayers that fall within my bracket, the very small ones that will not be able to afford the cost of keeping an extensive books and records. So there has to audit,
Who files my tax returns?
Well, the tax returns can be filed either by the consultant or the taxpayer himself, but the audited financial statement must, of course, be prepared by the auditor and certified. Any other one, our process can follow directly by the taxpayer or, assigned to the consultant.
So, how often does a company file company's income tax returns?
Once in a year.
Once in a year. Okay.
And 6 months after the accounting year end of the company.
So I cannot do it myself. I cannot just come to you. I have to use a tax consultant, or like you said.
As a limited liability company, the only extent you can do for yourself, you can file the returns by yourself, is after the preparation of the audited financial statement. Thereafter, you can do other things yourself if you so wish. But the audited financial statement must be prepared by external auditors.
We've also spoken to some business owners, especially those that come under your purview, and they talk about the monthly filing of VAT returns and remittance of same. And they complain that it's a bit cumbersome for them to do so on a monthly basis. What has been your experience? How are your taxpayers behaving in the area of filing and remittance of monthly VAT returns? Are they fulfilling their obligations?
As would be expected, we have taxpayers that will not comply. Even when they are doing good business, they will not comply unless they are compelled to. So within the bracket I am dealing with, we still have issues of rendition, and a good number of them not rendering returns, from time to time as expected, by them. Yeah.
Business owners also from time to time get withholding tax withheld from income due to them, and they have to collect withholding tax credit notes at the end of the road. How is that going now? Being able to acquire withholding tax credit notes.
Yeah, I think the problem has really eased with the system, with the transformation going on in the service now. If you know where we're coming from, it used to be a real issue. It used to be a real problem getting withholding tax credit notes. But over the last 3-4 years, I can confidently tell you that the delay has, greatly subsided. I wouldn't say it's been totally eliminated, but it has greatly subsided. But unfortunately, even when these credit notes are issued, maybe out of ignorance or carelessness or nonchalance, most taxpayers don't even bother. They don't even know the worth of what they have, so they don't even bother to contact, the contractees, to have the credit notes collected. So because of that, and maybe sometimes the contractees don't help the situation, because after the collection of the credit notes, they just take it to their offices and dump. It's only few taxpayers that know their rights that go, after them asking for it, and the rest of them, which shouldn't be. At a point in time, we're thinking about this, on how best to do it. But I see there's a light at the end of the tunnel, because we are migrating very soon to iTax, and I see that problem is going to be, dealt with, certainly. But at a point in time, what I was trying to say is that we're tinkering with submitting this credit note directly to the beneficiaries, but it would have been a very uphill task, because some of them cannot even be located. Some of them are portfolio companies. Their addresses you can't even locate, and so on and so forth. But like I said, thank God there's light at the end of the tunnel with the iTax, that is coming on board. That the credit will automatically, be taken into the ledgers of the taxpayer.
You spoke about the worth of what they have. What is the worth of it with withholding tax credit notes?
It's money. It's cash. There's no better way to describe it. It's cash. It's just that they don't know. Okay. Some know. Obviously, some know. Majority of them know, but sometimes maybe out of ignorance or nonchalance, they don't even bother to go after it.
How do I make use of them?
It's simply to take it to the tax office after along with your tax returns. That, look, I have suffered this. My liability is this. This is my money I'm using to pay. It's money.
And you accept it?
Obviously. Absolutely, yes.
Of course, at the end of the road, we also talk about tax clearance certificate. When do I qualify for a tax clearance certificate?
Yeah, going by the provisions of the law, you are qualified to obtain a tax clearance certificate when you have paid all the taxes that you are expected to pay.
That's a tough one. That's a very wide one.
Yeah, all the
taxes
that you are expected to pay as a taxpayer. Be it education tax, be it companies income tax, be it value-added tax, all the taxes. You have to self-assess yourself, so it's not supposed to be a problem. So you determine all that in the course of filing your returns. And then after you have made all the payments, you are entitled to your tax clearance certificate. But there is a proviso which many taxpayers tend to overlook. The provision that is given in the law is that that tax clearance certificate can be given upon payment and where revenue is of the opinion that no further taxes is expected. Where revenue is of the opinion. So if I feel that the taxpayer has shortchanged the service, and if I give him the tax clearance now, it's going to elope. And then, of course, I may not give him that tax clearance until I have cleared the issues I have in mind. So sometimes when that is happening, a taxpayer becomes unnecessarily agitated and feels maybe the revenue is being unfair to them. But it has to be done. Because as soon as some of them get the tax clearance and leave the office, you will never see them again until there is need for to procure another tax clearance certificate. And worse still is the fact that some can come the following day with the erroneous belief that if I had any issue the previous year, then of course you shouldn't have given me the tax clearance certificate in the first instance. So the fact that you have given me the tax clearance certificate means that I've been absolved from all other tax liabilities. I've been totally cleared. That is a mistaken belief again about tax clearance certificate. The fact that it is obtained does not mean that there are no other issues that can arise from it. Yeah, but the point is made. It is when all payments have been made and revenue is of the opinion that no further liabilities to arise from, the rendition.
Let's go back to self-assessment. Still talking about the issue of tax clearance certificate and the fact that I'm qualified for it when all taxes have been paid. When the business owner, the taxpayer, submits self-assessment, he has self-assessed himself, he has made a check of the amount due to the FRS, maybe subtracting withholding tax credits and all that. Do you just accept my returns and I go and say no more, or are there other steps that you take in determining whether I have spoken the truth or not?
Of course, there are other steps we take. We don't just accept hook, line, and sinker and go to sleep. Certainly not. But the fact that the self-assessment has been made makes it lighter for the revenue to review, even faster for the taxpayer to get service. So the first stage is what we call the arithmetical check. There are some that are very obvious on the face of the returns that we can do, a quick snapshot, to confirm. It could be addition error. It could be technical issues about wrong rates of capital allowances, used. These are factual issues that cannot be contested. If you're supposed to use 5% and you have used 20%, it's clear. It's not contestable. So those checks will be done instantly, if possible, at the point of reception, of those returns. Before giving the service. But if not immediately, soon after the submission, that could be done. Then there is also the more detailed review, which we call the tax audit, which can follow, subsequently. But that is if it falls within the selection criteria of the service, having passed the review test, what we do by description of risk profiling. So if it falls within the bracket to be taken up for audit, yes, of course, it could be taken up for audit. And in the worst case scenario, where evasion is detected, even after a taxpayer has self-assessed himself, and there are indications to show that the evasion or fraud in their returns, then of course it could go for the very big one. That's the investigation. So there are tranches, of review after the submission of the self-assessment.
But give or take, if my accounting year is January to December, which means I have to file latest 6 months after, 30th of June. Yeah. How long does it take from that time for me to know whether I have passed or not? Yeah. For you to now say, take your TCC.
No, the TCC could be immediate. If you are talking of the review, the TCC could be immediate if the payment has been made and there is no encumbrance whatsoever, immediate encumbrance on the returns. You get your TCC and go. These reviews can go on, subsequently after obtaining the tax clearance.
Without prejudice to the fact that I have received the TCC.
Without, yes, to the prejudice that you have received the TCC. The TCC will only be obstructed if the tax officer believes that the facts before me is so substantial that I cannot let go without, clearing before obliging the TCC. Or under the belief that, look, if I deal with this man now, he may abscond, I will never see him again. So under those circumstances, yes, you can. Otherwise, as soon as the payments are made and other issues are cleared, the man gets his tax clearance, and leaves. But in terms of the review, there is no definite set time, It could be, the case could be taken up 6 months after the submission. It could be taken up immediately if it falls within the sample selection.
Yes.
It could even be a period of 2-3 years after, because a number of factors determine this. And one could be availability of personnel or the audit cycle, so to say. The service may not want to saddle, the taxpayers on a yearly basis, So maybe it wants to batch it. Maybe after 2-3 years, you do a visit. So make it to create a bit of ease for the taxpayers.
From this your vantage position as a regional coordinator, do you still get complaints about fake TCCs? What I mean is, do people still fall into situations where they give them forged tax clearance certificates, or is it a thing of the past?
I wouldn't say it has ceased, but what I can say is that it has significantly reduced. It has significantly reduced, but I cannot beat my chest anywhere and say that it's no longer occurring. We still have pockets of it, and you'll find very desperate people, very fraudulent people, taxpayers who don't want to pay. So they will do everything to procure, fake ones to do their business.
How do we certify that what we are looking at is a genuine TCC?
There are features on the original tax clearance certificates that's known to revenue officials, and that I cannot tell you.
Okay.
I can't disclose that to you. But if I see one, I can easily tell you whether it's fake or original.
Oga, don't come. Tax man, na you. Sit down. How long you thought you go take bring the tax clearance certificate for me?
Oga, once you give me the money, the tax clearance certificate go ready now.
Now?
Yes, Oga.
Oga, wait, make I bring the money.
Wait. Agent for Federal Inland Revenue Service? This one a Wururu person. Come for here. Guy, forget all these Wururu people. Go any Federal Inland Revenue Service office where they near you. Go collect the original tax clearance certificate. To know the original tax clearance certificate, the tax certificate must get FIRS watermark. It go get signature on top of the FIRS seal, and the name of the tax office where they on top of the certificate must they correct. No print, no give, no even collect fake tax clearance certificate. FIRS don't want say anybody we then catch with fake tax clearance certificate, now jail straight.
For more information, visit www.firs.gov.ng or any FIRS office close to you. FIRS, it pays to pay your tax.
At the beginning, we spoke about the various commendable initiatives coming from the FIRS. Against the background of those initiatives, especially in the area of e-filing, e-payment, these ITAs, how do you see the tax system in the next 2 years, especially from the perspective of giving comfort to the taxpayer?
Great. I see it like an Ireland. I see the revenue service operation like being on a beautiful island and doing business, with the office. Why do I say this? There's going to be a lot of comfort. There's going to be a lot of ease for the taxpayers. It's just like, for instance, bringing it home. You're going to the airport now to queue for tickets when you can buy the ticket, from your handset I mean, it will look very awkward as a chief executive, you know. So we are looking at revenue service tomorrow in the next 2-3 years, if that is not even too far, for a situation where you can do most of these transactions from the comfort of your room. Not even office, from the comfort of your bedroom. You do. If it is tax clearance, if you've made a payment, just press the button and you print your tax clearance from the comfort of your room. Convenient. You can make your payment, you can file your returns from your office with us. So there will be less interface with officers of the revenue. And what that means is that some of the sharp practices, you know, though have been reduced significantly, that may still be existing in some few places, will certainly be eliminated, if not reduced, if not fully eliminated.
We thank you most sincerely for your time. We hope that when next we call on you, you will oblige us with your wealth of knowledge. Thank you for coming on to Tax Matters.
Thank you very much.